James, by the
Oh,
way.
you can. Oh, okay,
Yeah.
great. I was
Oh,
like, I can't get this to work.
yeah. So happy Saturday, everyone. Welcome to the Note Show. Here we are with Maurice Thomas Jr., James Guajardo. Is that close? Alden Guajardo. And we're going to talk about, we've been talking for the last, seems like over a month or so. Our theme has been affordable housing, or from a real estate investing perspective. It's come up in various forms. Maurice provides rooms for people. He's got housing for not quite a group home, or one of them's almost classified as a group home, but basically housing. And James and Alden are in Phoenix, Arizona area, and have a company called Win Mobile Homes, and also an investment opportunity. Like, the other thing we're going to talk about today, which is the title, is almost every week we come up with, we talk about note investing, right? And after we've kind of horrified people about, how much work and trouble is into that, then we say, oh, if you don't want to get into the weeds with that, we have a passive investment opportunity, and the two of you have a very good passive investment opportunity. So maybe do you want to just introduce what you do?
Yeah, hey everyone. Appreciate you having me on the channel here today, Greg. I happened to tune in last week at the last minute, so appreciate you guys having me on. I'm Alden Guajardo with Silvercrest Opportunity Fund, Mobile Mailbox Money, and Win Mobile Homes. We're a licensed dealer of manufactured housing here in Arizona, buying, remodeling, and reselling affordable homes, offering a seller carry finance program, which has escalated our business into garnishing private capital for the notes that we originate. So that's just a quick little recap of what we do. And my partner, James Guajardo, is here today as well.
Yeah, so Alden kind of said it all in a nutshell, to tell the truth. Doing the mobile home business of buying them, rehabbing them, and reselling them has created other unique opportunities in the market for us, such as providing financing. Where's my thumb? Let me get my thumb in the view. Providing financing, which is where a lot of the conversation actually goes into, is where the greatest wealth could be had for the least amount of effort. But it's also, we put together a Silvercrest Opportunity Fund, which is a new fund that will be officially rolling out the end of this month, that is in the business of buying actually the entire mobile home parks and RV parks. And we'll probably touch briefly on that.
Oh, that's great.
So yeah, we started this business about 5 years ago in a licensed dealer of manufactured housing, and we were buying, remodeling, reselling on a grand scale, doing about 3 to 5 transactions a month. And as a dealer, we saw the opportunity in the market where not everyone had the 80 to 100 or 50,000 to execute a cash purchase on a home. So we saw a need in the market for a seller carry finance program, not only because the lack of housing here in Arizona, but also the lack of financing on manufactured housing. So we saw an opportunity to do that, and that jettisoned our business to another level, offering people a payment structure that piggybacks with market rent. So pretty much for what they pay in average market rent here in the Valley, they can own a quality remodeled manufactured home here in desirable areas for what they would pay in market rent. So on the note side of originating that seller carry note, we're here on the note show, right? That creates an opportunity of a stronger investment grade of the originated note that's Dodd-Frank compliant. So they fit a 600 plus credit score, no past evictions, verifiable income, no open bankruptcies, and a specific debt to income ratio where they fully qualify for that note. So not only do they fully qualify, it's backed by a home, a mobile home that is fully remodeled with like granite counters, new cabinets. It's a qualified client in a desirable area, and it fits market rent. So the investment grade of that note is a higher grade, seeing as it's backed by an asset that's been remodeled, the buyer fully qualified for that note under Dodd-Frank compliance through a third-party company, as well as its third-party contract service. So we set it up through automatic payment transfer services to keep up to date of payments, as well as provide a level of, a wall up between the buyer and the borrower and the lender to service those payments. So the average loan originated on a manufactured home is like $80,000. So for $80,000, a capital investor could acquire this note in a top 10 market that is comparable to market rent, with a fully underwritten qualified buyer, as well as having contract servicing on that loan. So within 30 days of acquiring that note, an investor could potentially start receiving their first payment, which is a tough thing to accommodate, especially with long-term residential real estate, conventional buy and hold, as well as having to, negotiate with a note seller. These are originated notes that come out on the market, and following that 30-day of origination, they start making payments. They outpace inflation. Average rates of return are anywhere from 10 to 14%. For the appetite of an investor, depending on their expertise in the industry of either note investing, real estate investing, they can have a few different options within this strategy. So they can either acquire that note 100% of the opportunity, right? Get the face rate, the blessings of the face rate. You control the asset. You get your lien position recorded on title, as well as an insurance policy that's required for the borrower to have the lien holder listed on the insurance. That's an option to acquire that note 100%, right? And take the blessing of the full face rate of that note. The advantage is obviously you get the higher return of a full face rate, but also there's some potential for a buyer to go non-performing, right? Because these individual could potentially stop paying. That's your risk within the program. We're mitigated with that within the underwriting of that note. But that being said, if an investor feels a little bit more seasoned within a program and they've invested in real estate, they can acquire that note 100%, take the full face rate, as well as the potential risk of a note going non-performing. If that happens within our program, we help our investors at cost go ahead and re-cash flow that property. What that looks like is we help them with our back office staff, who we have attorneys through the eviction processes, and within a 40-day program at cost, we reacquire the asset, get the property back, order a writ of restitution, and within 40 days, we'll have an assessment of if we need to paint and either update some flooring if they nicked up the flooring, hopefully not, and then re-offer that home for sale in a regularly marketed sales platform, Win Mobile Homes. So that's the mobile mailbox money category, right? You're collecting the note payments, receiving a passive income backed by an asset with your lien recorded on title, right? So that's for more of a seasoned client that may feel a little bit more comfortable with taking a little bit more risk to earn that higher return. The second opportunity, which is note hypothecation. I think that there's not a whole lot of, there needs to be more education and note hypothecating. Why? Because it allows an investor to participate in that same program on the same asset with a vested partner who hypothecated that note to them, possibly at a lower rate, in order to earn the spread. Hypothecating, what does that mean? Hypothecation means in order to garnish a capital investment, you're pledging a collateral asset in order to garnish that capital. So say, for instance, right, a note originated is paying 14%. That's the face rate, right? I can originate that note, hypothecate it to one of my investors at a 10% return, right? So my investor's making 10, satisfactory rate. We have an asset to back that collateral, as collateral to back that capital, the investment, while I'm making my 4%. So not only did I do the same deal with the same class of investment, same underwriting, they participate in a smaller return, right? Still satisfactory, 10%, but they get a vested partner within the program where they may not feel all that comfortable taking on the brunt of potential responsibility to recash flow a property. They want that passive return, like you were saying. Passive wealth is really where it's at. Not all that many people want to be in a sweat equity program knowing that a potential problem could arise, that they may not be in state, or they may be a traveler, they may be high net worth, wanting to secure an asset-backed strategy, but still have some level of a vested partner. So that's where Silvercrest Opportunity Fund comes in. Silvercrest hypothecates the notes, which is mobile mailbox money, creating passive income backed by an asset in a note strategy. And Silvercrest allows us to garnish hypothecated notes and capital investment from accredited investors. So hypothecation is within Silvercrest for accredited investors. Mobile mailbox money allows non-accredited investors to acquire notes, right? The originated notes that we do on affordable housing, which is one of the biggest things being Googled right now, affordable housing. There's a problem with affordable housing, people, if you didn't know that.
Yeah.
But that's here in Arizona. So top 10 market, we're originating notes in affordable housing. We're seeing a big strategy push for affordable housing, not only from like BlackRock, Vanguard, and State Street, but also Warren Buffett. Warren Buffett happens to own 21st Mortgage, and 21st Mortgage did 90% of the manufactured home loans last year. Not only does he own 21st Mortgage, he also owns Clayton and Cavco. Clayton and Cavco have factories here in Arizona, and they're the two largest manufacturers of mobile homes. So that's my strategy. Buying and selling mobile homes, originating notes on manufactured housing. It's literally an institutional investment program that we're chefing up here. And there's not all that much competition. There's a lot of people that stray away from mobile homes because the historic negative connotation, where now it's escalating more to a commercial availability. Institutional investors are buying these mobile home parks at high multiples, raising the quality, to hedge the market. They see where the market's going. They're buying residential property at a high multiple to hedge their bets in unaffordability of residential real estate. They're buying mobile home parks. I think that mobile home notes, manufactured housing, and affordable home ownership programs are a great way for an individual to hedge their investments, diversify their portfolio against market volatility in the stock market, residential real estate pricing and interest rates, as well as just have some initial additional diversification on an income-oriented investment strategy. That's my soapbox.
No, that's perfect. So you're helping to solve the housing problem in your area, and it's a model that people can use in other areas. Dr. Ivan Terrero is in Florida, and he is doing something similar to what you're doing. And so I don't know, Maurice, Ivan, do you have any questions?
Well, James and Alden are trailblazing a path that we are aspiring to do. We got not started in Arkansas and Georgia, and whatever they're doing, we're trying to copy. That's all.
On that note, I think there's additional opportunity. At the end of the day, there's not all that many people that are executing in this marketplace. And what does that mean? That means there's an open door of opportunity. So, I'm happy to discuss on potential collaboration and maybe what that looks like. Why? Because I think that the mobile home parks themselves need us. They need us, literally. Why? Because in Arizona, in my market, they're taking back properties here and there, trying to get a more quality of a community and the aesthetic. So for them, if they take this blight of their community, of a home that's like either a hoarder house or someone died in or things like that, they're going to demo that home and have to spend $150,000 to get a new product in there. They lost 6 months of lot rent. Now their lack of sales staff is having a problem even selling that home. And then we come in, we find that institutional owner. We have some great relationships with some corporate entities here in Arizona, but opposed to having to come $150,000 out of pocket, we come in, buy that property. We may have some free lot rent within our negotiation because we're doing them a service. So we took down the asset, remodeled it to almost, it looks brand new. We started doing newer siding and like granite, new cabinets. A new home doesn't have granite and new cabinets. They have Cavco cabinets. Those are in-house manufactured. So it's a little bit higher of a product, as well as our sales staff. We are a licensed broker, so we offer that home for sale, bring them a qualified client. On top of that, we offer financing, which is a scarcity in the market. So we hit like 3 or 4 different boxes, opposed for a park to pay $150,000, be out of pocket for 6 months of lot rent. They're like, man, just give it to them kind of thing. Or have them pay the back fees. That's what they're thinking about, their lawyer fees. They had to abandon the property, get the title back. We come in and offer a full turnkey service. I think that that's a win-win, and that may be a opportunity to replicate that across the country, because a lot of these institutional owners of mobile home parks own like 50 parks. Say CalAm Properties, Equity Lifestyle Solutions. There's like 10 more mobile home parks, and there's more people that are jumping into this industry, but they don't focus above the dirt. They buy the dirt, buy the lot rent for the long-term cash flow, but they're like kind of either don't have this strategy of the in-house financing and how to structure a Dodd-Frank compliant note for an exit strategy to create an owner. But they're thinking like, man, we need to just buy a bunch of new homes. Well, that's like a couple $1 million in homes. That's not an easy thing to accomplish. That affects your cap rate. That affects your initial raise for the acquisition. So we're touching on, I think, our now pivot point into affordable housing and mobile home parks, because our additional strategy provides that much more value to a mobile home park, where we can piggyback these two strategies together and make a cap rate on the mobile home park lot rent and reestablish that because of deferred maintenance, as well as our strategy above the dirt on notes, which is the even more passive program, opposed to having to do the sweat equity of a mobile home park. An individual can acquire a note, start receiving their cash flow. It's Dodd-Frank compliant. We turned a renter to a homeowner. It's some emotional satisfaction of providing a needed service. These people are crying at closing. That's the real deal of this opportunity. So that's what I see in the market. And Ivan, I'd love to talk about additional opportunity. We love the Florida market. We've been invited multiple times to venture into the Florida market. But really for us, it's hard. And as an investor on even a note or whatever it may be, it's hard to invest in a new market with no boots on the ground. So, I'd love to explore the potential opportunities of that and how we can gain additional velocity in creating notes, passive wealth, and in one of the hottest markets in the country. It's affordable housing. When the freaking real estate's unaffordable, where are people going? They're going to affordable housing. When the market's crashing and people are having to short sale their homes or whatever, where are they going? They're going to affordable housing with rental rates at all-time highs across the country. Average median single family prices have gone up like 50% in the past 4 years. Residential real estate interest rates are up. They said they were going to reduce 3 times this year. Where is that at? There's fluctuations up and down. I mean, this fits so many boxes for a capital investor looking to place money in almost a recession-proof program. I don't want to swear by that, but I feel honestly that there's no other category or asset class for an individual to hedge the market of what's going on. We got all these big whales manipulating real estate prices and Bitcoin and stock market. Listen, this is where it's at. And if I'm not telling people and they don't understand that, follow Warren Buffett, BlackRock, Vanguard, Googlestone. The proof is in the pudding. They're not going to tell you because they want it all for themselves. They're sitting up at the table by themselves right now, and we're grinding here away trying to replicate that.
Yeah. So you mentioned dirt and also collaboration. Brad Warren was on here last year, and he's got a. They're selling dirt in California, north of Los Angeles, right? They're selling empty lots on speculation that they can use it for something. It sounds like some of them could be mobile home parks.
And it just depends on the local, the local zoning, how friendly they are in mobile home parks. Here in Arizona, it's on a grandfathered clause, so they don't even allow you to develop unless like your cousin's the governor or something to develop mobile home communities, because they have such a negative historical connotation of affordable housing. The mindset here in Arizona is a lot different. Where Florida happens to be an opportunity program, I think, and I may be misspoken. Me and my father were talking about it, James, about the ability to develop easier availability, where Arizona, it's like, it's pretty cut and dry.
Okay.
I live in Florida, but my market is actually Arkansas and Georgia. So Florida, I haven't been able to find anything that really is fits our buy box, because land is expensive, and a lot of people are speculating on mobile homes. So we haven't been able to find something yet. But that doesn't mean we're continuing. We stopped looking.
And Arkansas is a great market. I went to MHI, Mobile Home Institute in Las Vegas, and made some individuals that are operating aggressively in Arkansas in that one market. And they showed me all kinds of great statistics. I forget them off the top of my head of the growth of that market. But they own like 10 or 15 mobile home parks there. And as a opportunity fund, we're looking into venturing with them into that market. So Arkansas, again, is a great market. And I see maybe we can help connect the dots over there and, figure out how to provide additional value in trying to earn our passive wealth. That's what it's all about. Trying to build up that portfolio, and until the cows come home, that check's running.
Yeah,
absolutely. I have a quick question. First and foremost, oh man, a lot of information. It's like if I was a brand new person, I'd probably feel like I'm drinking from a fire hose right now, because this is a lot.
Yeah.
But I want to go back to accredited versus non-accredited. Can you kind of cover, for the audience of anyone that's new to this space or just new to investing, can you kind of cover the difference between what a non-accredited investor is and what an accredited investor is, and how you guys kind of partner with non-accredited investors?
Absolutely. Yeah. So an accredited investor, in short, is about $1 million in net worth. They'll get a verification either from their local bank or their stockbroker, things like that. And I think it's either $1 million in net worth, or they earn over $200,000 a year. And I think those are the two options. We have a third party that can help the validation of accreditation. Go ahead.
And it's $1 million of net worth without the home, and $200,000 a year income if they're single. Married is $300,000 a year income.
Yeah, great point.
Great.
That. Yeah, so the non-accredited programs are really note acquisitions, right, in lay terms. So they can acquire a note as a non-accredited investor. On top of that, I can also hypothecate the notes that I originate. So it's somewhat of the same categories, but at a smaller conversation of acquisitions and things of that nature. So non-accredited can acquire a note, and I can hypothecate with them, or they can be accredited and invest in the fund and have either equity ownership in the fund on a per unit basis. So those are kind of the two right there.
So what is the minimum amount to invest in the fund?
For an accredited investor, it's like a $50,000 minimum, and then there's some smaller variations after the initial investment. It is an online portal, like an online brokerage account, almost like a Robinhood account, where they have a portal, they can log in. And what's unique about our fund, Silvercrest Opportunity Fund, is we have a opportunity to provide a multi-asset diversification program where we can throw a tranche of notes up on our portal so they can invest in notes. They can also further diversify within an acquisition of a mobile home park. So that'll be a debt and equity raise, as well as further opportunity possibly for either subject to purchases, which is we're buying an assumable loan, or go after a multi-family acquisition with the variable rates that are going on. We may see some opportunity in there, but really we're trying to focus on affordable housing, which is our main modus operandi, and further diversification within that asset class of affordable housing. So debt and equity in mobile home parks. We have a strictly debt raise on the notes that we hypothecate. So a couple different avenues.
Great call. I have one more question that just came to mind. Earlier, you kind of touched on affordable housing, and that's something that's mission critical across any community. And like you said, Arizona is top 10 when it comes to, just mobile homes, the mobile home space in general. So I have an investor here in Georgia who's looking to use a couple of our properties for group homes, shared living spaces here. So my question to you is something that I'm kind of uncertain about. Is during my research, I may be wrong here, the communities themselves, as it relates to just using it for a shared living like community or a group home, is it more like a HOA, meaning when it comes to like subleasing the property or different things of that nature, or is it more of, I guess I don't want to call it the Wild Wild West, but if someone owns the land and owns the owns the land and the actual mobile home itself, my point is it more related to like a HOA community, with the mobile homes itself?
Yeah, so on personal property, leased land, mobile homes, which is what we specialize in, those communities 9 times out of 10 may raise the shotgun if you ask them about that. That being said, they're very strict in their rules and regulations. So it's almost like an HOA. You can't Airbnb in a personal property leased community, depending on the ownership. But 9 times out of 10, they're not going to allow you to do either like a shared home. They're really looking for primary housing, primary residence or second home, snowbirds. A lot of subleasing is kind of thrown out the window, where opposed to a land and manufactured home purchase, depending on the location, you can get creative. You can either sublease it out. I've seen some people doing pad split here in Arizona, where they throw up a partition in the middle of the room. They do multiple people in the house, or you could do some form of, assisted, the creative programs that you were mentioning here.
Absolutely. Yeah. Cause I see in Arizona, it's more of like with the group homes themselves, assisted living or shared living space. It just depends on the name or the region that you're in. Arizona
Right.
is in the top 5 with those kind of space. And it's a big thing out there with assisted living and residential care facilities and different things of that nature. So I appreciate you sharing that. Now, as it relates to the notes themselves, you kind of said individuals can kind of go and maybe look at, what's available through a website or a portal. Do they have to be a part of the program or different things of that nature for individuals who are looking for notes for sale from the Silvercrest Opportunity Fund itself?
Yeah, so your exclusive offer here today on the Note Center, just to let you know, this is exclusive gem, one and only offer here on the notecenter.com, and our roundtable discussion here this morning. If you're looking for notes out in the market and you'd like to explore maybe what we have available, mobilemailboxmoney.com is a avenue. You can sign up for our program and receive some initial marketing. We don't have any available right now, but we do have some coming soon at mobilemailboxmoney.com. We are also taking investors on silvercrestopportunityfund.com. So if you'd like to check that out, you can go to our investment portal and sign up as an investor to view the various opportunities that we may have available. And then winmobilehomes.com, you can see some of the homes that we have for sale. So if you're an investor, you're like trying to find some finished product photography, or what pricing's like, winmobilehomes.com. Notes, mobilemailboxmoney.com, and larger opportunity, silvercrestopportunity.com. So those are the three.
Nice.
Fabulous. Well, thank you very much.
Yeah, no, hey, fellas, it's my pleasure to be here today. It sounds like we're kind of wrapping up here. I'm greatly appreciative for the opportunity. We have Diversified Mortgage Expo here at the end of the month. If you're a note investor at all and you're looking to either expand your network or gain additional relationships, gain some due diligence, check boxes. There's great discussion panels. Mobile Mailbox Money will be there in attendance with a breakout room and a booth. That's in Nashville, Tennessee, at the end of this month, the 31st to the 1st. We'll be out there. Be happy to meet you. Maurice, hopefully you can make your way out there. Would love to share a cigar or something like that.
Yeah.
Absolutely.
Thanks for the reminder. I'm going to put a list to all of these, the DME and all the other key shows that people have recommended here. I'm going to put it in the notes center in the next week. So I mentioned DME is kind of special because they have, you go the day early, you can go to a bar and throw axes. And so, I always think alcohol and axes don't necessarily go together, but apparently it's a lot of fun and hard to do.
Yeah, I'm definitely going to go ahead, Dr. Ivan.
It's hard any way you slice it, throw an axe with or without alcohol.
Yeah. Anyway, well, thank you very much, and I hope people come out, take you up on your offers, and I think there's a lot of opportunity for collaboration with you. There's people in the room here, and a few people who could make it. So we'll keep the conversation going.
Absolutely.
Thanks for having us.
Hey, that's the notecenter.com and Mobile Mailbox Money.
Yay! Where it all happens.
Thanks,
okay,
fellas.
thank you. Happy Saturday, everyone.
Okay, thank you.
Thank
Bye-bye.
you. Bye.
Bye.